Welcome back. With India's economy picking up pace, foreign investors have become more confident in the country's growth prospects. This, according to AT Kearney's 2016 Foreign Direct Investment Confidence Index. India has jumped 2 positions to come number 9 and re-enter the top 10 rankings in this year's index, which analyzes how political, economic and regulatory changes will likely affect FDI inflows into countries in the coming years. Now, the index is constructed on data from a survey administered to senior executives of the world's leading corporation. In fact, joining in now to discuss the index further is Abhishek Poddar, partner with AT Kearney. Hi, Abhishek. I appreciate you joining in on the show. My first question to you is, what really were the parameters? There are several parameters that you judge, including the domestic market size, regulatory transparency, lack of corruption, cost of labor. What specifically were the parameters that edged India's ranking to come in at 9?
Hi, good evening, Kritika. Thank you for having me over. We administered the survey to a range of senior level executives across the world and asked them to present their outlook about respective countries over the next 3 years and specific confidence about investments in those countries. What we found is there are fundamentally 3 reasons why most of the investors look at a specific country from an investment perspective. These are the size of the market, the cost of labor, and the regulatory transparency and ease of taxation. India scores well, no points for guessing, very well on the first 2, which is the size of the market as well as the cost of the labor. The concerning factor which still sort of stops India from moving much further up onto the index has been on the regulatory transparency and just the ease of doing business.
But you know, Abhishek, the ease of doing business aspect is something that has been hurting India's overall FDI outlook. A lot of concerns also have come in over the last 1 odd year about how there hasn't been as much action from the government. What, according to you, or as per the study, what, according to you, is the outlook that companies hold with respect to ease of doing business?
So, you know, when we interacted with most of the executives, I think the recent developments coming out of India has really appealed to the investors. A couple of things that really stood out. If you look at the survey and the outputs, there are only 2 emerging markets that lie in the top 10 of the entire survey, which is China and India. And notably, the negative sentiments around China has actually increased significantly because of the volatility. India, on the other hand, has demonstrated significant growth. You know, amongst the largest developing nations, it's got one of the fastest growing economies. In terms of just the prospects of ease of doing business, at least what the new government has been offering has started to appeal to the general mass as a whole. However, people do express their concerns that there is still lack of coordination or seemed lack of coordination between the center and the state regulatory affairs, and a lot of investors get perplexed by the myriad of taxation regimes that still exist. Plus the news coming out from the country, whether it is GST sort of lingering off or some of the other reforms not being able to push across, obviously sort of falls short of the expectations of a lot of investors. Having said that, India is definitely as a bright spot amongst all the other emerging markets that have been looked at by the investors as a source of FDI investments over the next 3 years.
You know, taking from that point, I was reading the report on how several emerging markets have gradually gone down, with the exception of China, which is still retained its position for the 4th consecutive quarter, if I'm correct. So specifically, how much of a factor is India's ranking moving up 2 points related to the other geographies seeing a significant slowdown, specifically Brazil, so on and so forth?
Yeah, it's a combination of various points. In fact, when the survey results came out, in fact, all of us were very surprised, because one of the clear outcomes that we saw was, you know, the trend that we saw in 2015 early, which is emerging markets sentiments going negative, really confounded, right? And to give you a sense, amongst the BRICS countries, it's only China, India, and Brazil, which figure in top 25. Russia and South Africa are out of the top 25.
Yeah.
And if you look at the overall composition of 25, 80% of the markets are developed economies. Only, you know, balance 20% comes from emerging markets or so forth. Obviously, when there's a portfolio reallocation that people are looking at, while the overall appetite for emerging markets seems to have gone down, people continue to buy into the India sort of a story, India growth story. In fact, one of the clear comments or outcomes that came out was almost 62% of the respondents, or these are senior level executives, clearly communicated that over the next 3 years, they're going to in fact increase their FDI exposure into India as compared to just about 39 to 40% that responded to China. And so many of these factors, other emerging markets sort of coming down, India growth story intact, and the reform sort of promises coming out from the government is really playing out well, as we see amongst many of the global investors.
Since you compared India and China, I agree China is still at the second position, and in terms of the kind of FDI outlook it's a different market, but nonetheless, the sense that we get across the board is that there is a dwindling when it comes to the overall growth perspective that China has, which in the long term may be something that India can tap into, maybe an opportunity in a way. Would you agree that some of China's loss could be India's gain?
Absolutely. It comes out very fair and square. One of the reasons why China continues to be the number 2 is just the size of the market is still huge, right? But however, when we asked the respondents to look at how have their sentiments sort of changed over the last 1 year or so, we had almost 1/3 of the executives becoming less optimistic, or I would say more pessimistic about China as an outlook over the last 1 year itself. Almost 40% plus of these executives, in fact, pointed out that if the ensuing volatility on the currency side as well as on the equity side continues, they may actually reduce the FDI investments as compared to what they have sort of fundamentally planned for. And in that sort of a noise, when India's sort of economic growth continues to sort of play out, a lot of portfolio allocation is finding its way into the country as well.
Okay, so if I compare that, specifically with respect to cost of labor, that is a very important defining factor in this study. China has scaled up, owing to cost of labor, but that now has changed, the dynamics has changed. Can India significantly gain over there?
Absolutely, absolutely.
Okay.
So for a lot of players looking into investments, in fact, when we looked at the sectors that are attracting the FDI, to again our surprise, while services continue to be amongst the top 1, a lot of executives are talking about investing into industrial manufacturing side as well. And some of that, if you look at the story that plays out, whether it's Foxconn's announcement for investment in India, Huawei's announcement, the cost of labor differential between India and China is increasing, and that's started to play to our advantage. As many players look at India manufacturing both as a source of tapping domestic market as well as the exports market.
Okay. But, in terms of taxation, would you say that China kind of scores, and not just China for that matter, if you even look at some of the other important emerging geographies that have actually made their way to the list, including Thailand, do you believe that India has been losing out largely owing to taxation, lack of taxation clarity versus the emerging market peers as well? And that is one area that you could probably see pressure in terms of the outlook in the next coming 2 years. Abhishek, can you hear me?
Yes, I can. Sorry, I lost you for a moment.
Yes, I was asking you about taxation, Abhishek. India seems to be losing out significantly when it comes to regulatory hurdles. How is India positioned in strengthening its taxation regime, keeping GST in mind if at all it does come in and when it comes in? But if you compare India directly to the emerging markets, where do we stand in terms of the taxation policy?
I think one of the biggest concerns that the investors are showcasing is not necessarily in terms of the tax rates, though obviously, many of the investors would like the tax rates to be much more simplified and mellowed down, but it's just the complexity of the taxation policies. There again, in fact, investors do believe countries like even China score much better when it comes to taxation policies and consistency of the same as compared to India. There are other emerging markets like South Africa and Russia, which has been rated much more poorly. But what is interesting is even markets like Thailand and Taiwan, we've actually found them come into top 25 amongst the Asian economies, because a lot of investors are rating them as pretty global, pretty open, and much more aligned with the global taxation policies as what we find in India. Plus, the issues of the retrospective taxation does not seem to be dying out.
I agree with you, Abhishek, and we don't know when there will be clarity on that, but completely out of time on this discussion. Appreciate you joining in. Important good news coming in, and like Abhishek was pointing out, the gap between India and China, while still important and huge, it's still narrowing to an extent, which is good news for India.